Welcome to the Uptown Syndication asset management update on the Tapiola Manor Apartments out there on 180th and Rosa Road in Aloha, Oregon, or Beaverton. I'm Chris Shepard, got Trent Warner and AJ Shepard here to chat about the property. Why don't you guys say hi?
How's it going? Howdy.
Okay, we're gonna dive into the rent roll at the property and just kind of give an update on how it's operating currently and a little bit about the market this summer. Um, so let me share my screen and we will take a peek at the rent roll. Okay, so here's our rent roll. This is kind of the health of the property. We've got a handful of leases here that we have renewed out to 2026. You can see that we do have a little bit of delinquency, and which has been a little bit of a problem in Washington County. AJ, do you want to talk about some of the evictions that we've been facing and just
I went to court with that specific one with Richard Cunningham, and we got
yeah.
a default judgment May 23rd. Then later that afternoon, he showed up and wrote something that got a judge to vacate it. So then 3 weeks later, we go to trial again, and he showed up to court with a check for the notice. So the way evictions work is we send a notice. We sent the notice in December. Um, and we have to file on that specific notice. So at that time, he only was 1 month delinquent. If we refile the notice in January or February, then the clock starts all over again on getting a trial date and first appearance. So he cured his notice with a cashier's check, and then we have to reissue a notice and then refile. So we are currently, Washington County is anywhere from 3 to 6 months out for court dates. So I believe our court date is in October sometime, unfortunately. All the while, he continues to not pay rent.
It's a pretty difficult situation in Washington County these days. Multnomah County is actually way better, which is, um,
It's like flip-flopped.
yeah, it's a really difficult situation. If we have a tenant that doesn't pay rent, um, they can delay, that this Richard Cunningham hasn't paid, he's paid 1 month of rent for, since December.
Yeah, he cured December's rent. So all of 2025, he has not paid rent.
Yeah.
And AJ, for this, the additional notice that we had to resend, is this for 1 month rent?
Oh, it was for the balance at that time.
So it's probably like
9,000, 10,000.
6 months rent or something.
Yeah.
So yeah, this is unfortunately a new trend in Washington County, which is unfortunate.
Well,
But
this is a loophole that's been kind of in Oregon for a while. Some lawyers and some lobbyists are trying to get this changed where, if they come to court, they need to, like, even if they have issues, bond at least the amount of money that is owed. Because I mean, it's literally a way to kind of like extend, pretend and extend.
yeah. Okay. Otherwise, leasing has gotten to be a little bit more difficult in this summer. We're seeing a little bit more vacancy. We're having to drop rents a little bit. We have 3 units vacant at Tapiola. I want to say we have one of the units rented out, or at least approved applicants. Trent, did you go ahead?
Unit 5.
Yeah, unit 5.
And 7 just became vacant within the last 7 days.
Okay. Otherwise, we do have a little bit of delinquency. I believe that most of that is utility bills. And so we're working on getting that cleaned up. Um, yeah, so let's have a look at the income statement.
Before we jump off of the rent roll, I do want to just note that we have 8 scheduled rent increases coming up in the next quarter. So
Yes, we do.
or I
So,
guess sorry, 7. One is next year, but yeah, 7.
okay. Um, but all in all, if we sort it by rent, um, we don't have too many tenants that are seriously under market rent, except for it's looking like David Benjamin here.
Yeah, that's a on-site liaison that,
Oh, our on-site helper. Okay.
yeah.
And then we've just got a few that, you know, are slightly under.
And honestly, I don't know if 1695 is an accurate market rent right now for a 2-bedroom.
Mhm.
Um,
Be-
the median or the average is 1534 in the area for a 2-bedroom apartment, and the median's 1500. These are good sized units, so it's
yeah, big
probably a little
units.
bit higher than that, but
Okay.
yeah.
Trent, do you know about how many we've renovated?
Oh, off the top of my head, I could guess and say probably 18 to 20 of them.
6, 7, 8, 9, 10, 11, 12, 13, 14, 15. So about 15. We just put new floors in 25. So
My tracking sheet for apartment renovations has us at 18 currently, with another one being worked on as we speak, so it'll be 19.
okay. Yeah, we're kind of working our way through all of the units. Okay. All right, on to the P&L. Let's just look at the total operating income. If you look kind of across the year, we were doing very solidly late last summer. And then January, February, we kind of died off a little bit. March, April, May, June, July were, um, it's going pretty well. So yeah, 555,000 compared to pro forma, what we pro forma'd for year 3. So I guess we are in 2025, so we're halfway through year 4, aren't we? Year 3 of
Halfway,
4.
year 3.
Well, 2021 or 2022 to 2023 is year 1. 2023 to 2024 is
We've we've owned the property for 41 months and 12 days, if that helps the.
yeah. So year 1 is months 0 to 12, 12 to 24, 24 to 36, and then we're in year 4. So we are slightly behind projections. Um, and honestly, I feel like that is not very much not aided by the evictions that we've been facing. We recently evicted 2 tenants, is that correct? Um, and unfortunately, we've kind of been running into legal fees. But yeah, these January and February were some really tough months. I think November as well, just with evictions. And so that has kind of shown up in the past couple quarters. Going through repairs, we have been cracking down on trying to reduce our repair costs. So we're about 1,500, a little under 1,500 per unit. Insurance has gone up significantly, which is not great. But we found a new insurance policy to kind of keep us below what I guess at what we were previously paying. We found a master policy, which has helped a lot. We were looking at a insurance increase of, I believe, 3 times the premium back in January. And so we found a master policy to be able to renew it at slightly, maybe like a 20% increase of the same rate. Property management is about 7%. All in all, 189,000 on 550K. So 189 divided by 550 is 34% expense ratio, which is pretty good compared to what we projected a better expense ratio, one with more income and less expenses. So that's one of the things that we have noticed is that utility costs have gone up significantly more. Our legal fees have gone up, and this repairs and maintenance number is significantly less than what we're actually experiencing at the property. So yeah, looking at just kind of the numbers overall, we're at 366,000 of net income, and we pro forma 410. So we're $50,000 less, or $45,000 less than pro forma. But we have a great loan. Property is cash flowing. We had about $30,000 $62,000 in capital expenses for turnovers and remodeling. And so that hit the P&L, or I mean, that's hitting the cash flow. And so that's what has been kind of hurting the overall cash flow of the property. So at the end, we're looking at 171,000 of net of cash flow, but that does not, we only have mortgage interest in here. We do not have our mortgage principal. So that is another $10,000 a month that gets paid down. So the cash flow is about 50,000 for the property. Yeah. So compared to our pro forma, we're supposed to be seeing 173,000 in cash flow, and we are seeing 52, at least over the last 12 months. So yeah, AJ, do you want to just kind of chat about?
Sure. I mean, like we've experienced rises in you mentioned the insurance costs. That
utilities.
was in utilities. From 23 to 24, we actually saw a decline in rents. So this is something that's like compounding. When we see a decrease in rents, then our basis is actually lower from what we need to climb above. What is kind of like nice to hear is business development services. There's been some news articles out there. I don't know if you've seen, but Portland decided to offer 5,000 units with no SDC fees. And the reason that they did this is because there is literally nothing in the pipeline for new product. So if we continue to see the increase of population that Portland normally sees, From 5, 10 years ago, that's been cut down. It kind of continues to decline down. I think at one point we were 7, 8% population increase over the MSA. Now we're kind of running around 2 to 3%. Our jobs growth is also slowed down. It used to be up at 7, 8%. It's also at 2 or 3%. That's still a healthy market. But with the advent of most of the current construction projects are scheduled to be finished up by the end of the year. Once that product, other apartments get absorbed, meaning people move into them, we see a potential for a supply issue. And when there's a supply issue, that means that demand is going to go up. So we are hopeful that in the near future that there's going to be some more demand that goes up. Also, with interest rates at their current rate, significantly above like what we're paying on this loan, it makes it harder for deals to go on. So in the market, we've seen volume drop by 25 or 75% over the last like 2.5 years. We are now starting to see some sellers and buyers kind of coming to agreements. Also, you have a lot of these loans have convert to a variable after 5 years, 7 years, 10 years, something like that. So there's going to be more people coming to the market that are going to have some tougher choices to deal with. So I don't believe this loan is up in 2028. Is that right, Chris? Or 20? I'd have to double
Yeah.
check.
So we started this loan in April of 2022. So we are looking at March of 2027 before we move to.
We have about a year and a half on that, and during that time, it's just going to be to try to maximize the ROI of the property. And if interest rates come down, that's going to be certainly favorable for us as well.
Okay. Yeah, and so yeah. So I'm putting together what looks like a 3-month average for the pro forma. So let me just. Okay. So looking at these numbers, and then let's just take a peek and see how we're looking. So 141,000 for income, and that's pretty spot on for the last 3 months. 8,000 for repairs. So this our property management company did just let go of a maintenance manager who wasn't keeping an eye on the P&L. And so we're seeing significantly less expenses for June and July. And I mean, honestly, if we have a look at August too, well, let's look at rolling 3. Well, let's look at rolling 12. If we look at August too, I believe our maintenance expense should be down. So yeah, last 3 months we're seeing like $3,000 of maintenance, so about $1,000 a month, which is more in line with the pro forma. And we're keeping a very, very, very close eye on that. We have had a couple turnovers in the past couple months, and so yeah, I mean we've had evictions, and we have 18, or sorry, we're gonna have 19 out of 30 units fully remodeled. But all in all, like projecting out forward for the next year, if we look at the trail, I think the trailing 3 is a very good way to see how the property is operating. It's 141,000 in income. I don't think that this repairs number is correct. I think it's more like $3,000. So I think that we'll hit that $15,000 number for repairs and maintenance. And so 42,000, 98,000 in net income. And so that's only slightly behind. And we are kind of behind the 8 ball here with lower rents and higher expenses. So I think you know, we will benefit a little bit of this or from it. Just when rents do go up, because they can't, you know, expenses can't keep going up and rents staying flat forever. That's just not a workable situation. There was a point in time in Portland around 2015, 2016, where rents just skyrocketed, and it you know, we're poised. All of our rents are at market right now, and we can increase them 10% a year. And so when rents do spike, we will be able to, you know, whip this property right back into shape. Okay. I feel like that's a good overview of the current condition of the property, and the pro forma. We are just slightly, you know, we're not performing the way that we should be. We're about $120,000 off cash flow, for the last 12 months. But I'm hopeful that we'll be back on track going forward. There's about $20,000 in the capital account, or not the capital, the operating account currently, which is basically what we need it to be. I expect we'll do a small disbursement for Q3, and then hopefully we'll be back on track, you know, probably Q2 or Q3 next year, if we are able to accomplish our goals with, you know, this one eviction that's been lasting since December. You know, eventually, like, that person is going to have to leave. I think that he knows it too. So, you know, we probably should offer him just like a little bit of cash for keys now, to see if he will vacate willingly.
Chris, we've tried that. There's been multiple people that have talked to him about it, and he's not.
I mean, but he has to know that he's running out of options.
Yeah.
So, Trent, are there any questions that we've got?
No questions specific to the Tapiola.
Okay.
All right.
Great.
Well, thank you guys. Thanks for listening, and looking forward to chatting with you more.